Let's get to our Steve Liesman down in D.C. on what we can expect from that Fed meeting later today. Steve.
Leslie, thanks very much. You know, two big econ data points and the Fed meeting for investors to digest this morning. Let's go through it all. First, we got the ADP. Came in at 125,000, a bit ahead of the estimate, stronger than the 75,000 estimate for Friday's payrolls. Important to note, this number does not include that GM strike, and that could weaken the Friday number from the government. GDP coming in 0.3 stronger than the estimate at 1.9%, largely on the strength of the consumer and government spending. The strength was offset by a second quarterly decline in business spending, which was just awful, in the words of one economist. Pantheon writing, could have been worse about Q3 GDP. Q4 probably will be. Chris Rupke at MUFG writes, the economy isn't going off the road and into a ditch, but the engines of growth are clearly tiring late in the business cycle. The data likely, however, does not change what the markets expect the Fed to do today. That is cut rates by a quarter point and signal a shift in policy that will make the next move by Fed Chair Jay Powell less automatic. Here are the probabilities. A 96% chance of that quarter point cut, but that falls to 22% for another cut in December. So the market providing that flexibility that the Fed has wanted. And then the next cut is priced in for April. That's above 50%. It's at 56%. But there's a lot of time between then and now. Barclays writes, we think that Chair Jay Powell will emphasize the committee is moving away from insurance-driven easing towards an emphasis on data dependence and meeting-to-meeting decision-making. The markets are prepared to provide that kind of flexibility to the Fed, but it's still going to be a tough job. We'll be listening closely for Powell when he tries to say we might cut, we might not cut. We're just not going to definitely cut.